Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today. In today's show, we're going to look at the art of raising private capital. My guest in this episode is Matt Faircloth. Matt is the co-founder and president of the DeRosa Group, a real estate investment company that specializes in buying and renovating dilapidated properties. Matt and his wife, Liz, started investing in real estate in 2004 with a $30,000 loan. DeRosa owns and controls a diverse portfolio consisting of residential and commercial assets throughout the East Coast and has completed more than $30 million in real estate transactions involving private capital. Matt and Liz are also contributors to the BiggerPockets community. If you're interested in joining our investors group, you could go to cashflowninja.com/investors group and fill out an application form and or email me at info@cashflowninja.com to start the discussion to see if you're a good fit for our group. If you're living in the Philadelphia, Bucks County, and Southern New Jersey area, we are hosting a live investors meetup event every month in Newtown, Pennsylvania. For more information on our monthly live event and information on how to join us and come out and meet us, you could go to cashflowninja.com/events. MC Laubscher here, the host of the Cashflow Ninja podcast and also the president and chief wealth and investment strategist of Producers Wealth, where we help our clients integrate cashflow banking, also known as infinite banking, with their business and investments. If you're interested in learning more about how we create strategies that integrate cash flow banking and investments to turbocharge them, you can access a video series at yourownbankingsystem.com. That's yourownbankingsystem.com. Matt, welcome to the show.
Thank you so much, MC. It's such an honor to be here.
Yeah, so excited to have you on, and so great to connect and meet you, and been looking forward to this, my friend. I think a great place to start is if you just want to share a little bit about your background and journey with my listeners.
Sure. So I graduated from college with a degree in engineering. And I was an engineer because people told me, hey, you're good at math and science, so you should be an engineer. So I said, okay. And I didn't know what an engineer was. I got my degree in that. And then I realized, hey, wait a minute. I actually don't want to be an engineer because engineers sit on the desk and do a lot of crunching of numbers and don't really interact with very many people and stuff like that. So I got myself a job in technical sales where I got to use my degree, but I got to be with people. And so I was a sales rep for 7 years. I had a great time doing it and enjoyed it, made a good living. And then started dating the love of my life, and she got me to read a book called Rich Dad, Poor Dad. And so I read that book in 2003 or so. And I decided, you know what, this is for me. I want to really engage myself in entrepreneurship, kind of found a bit of my soul in being an entrepreneur. And so I bought a 3-bedroom, 1-bath, moved into 1 bedroom, rented out the other 2 bedrooms to 2 friends of mine. The 2 friends of mine were each paying me $500 a piece in rent, but my mortgage was $940. So at like 27, 28 years old, I was making $60 a month and living in my house for free and still had a good day job. And that, so I was able to pay off my student loans, was able to completely get myself completely bad debt free. And in that, I had drank the Kool-Aid and I was sold on real estate investing from there forward. So when my wife and I got married in 2005, I quit my day job, started investing full time, and built my DeRosa Group company. Started out in Trenton and have slowly expanded outwards from there. And it did a lot of fix and flips, did a lot of other things, but really focused on rentals in the downturn, and have now expanded our rental portfolio up to where we buy apartment buildings and turn them around and get them performing again.
Now, Matt, if you don't mind sharing a little bit, because you started with fix and flips, you kind of grew your portfolio, and now you're focusing more on the rentals, the buy and hold.
If you don't mind sharing a little bit about your model, what type of units you buy, where you buy it, why, and what are some of the value adds that you guys provide or add to the buildings?
Sure. So we believe in workforce housing. I believe in markets that have really good fundamentals, and I'll explain what workforce housing is in a second. But I believe in workforce housing. I invest in markets that have good fundamentals but have not gotten hot yet. So if I hear a lot of my fellow syndicators talking about markets, then I move on. Like you're not going to find me in Dallas or Atlanta or Tampa or Jacksonville, or Phoenix or anything like that, because there's plenty of competitors already. There's enough people buying deals in Dallas or Houston or San Antonio. I don't need to do that because they've got enough buyers there. So we find markets that have a lot of really good fundamentals. Maybe are not as hot and sexy as those other markets are, and as big of a name as those other markets, but they still have the same fundamentals. And so we like, several cities in North Carolina. We like several cities in Kentucky. We like central Pennsylvania. We like Baltimore. Markets that are, tier 2, tier 3, but have a lot of the same fundamentals. When I talk about fundamentals, I like to see job diversity. So not one or two employers, that there are not one or two industries that are the major employers of a town. I like to see employment that's more of a broad spectrum. And that's so if there is a recession or a downturn, that we can, the town has a better chance of holding up through a downturn than areas than properties than areas that don't have that rely on one or two industries to keep their jobs going. And when I go back to workforce housing, I'm talking about just blue collar workforce, folks that earn around the median, not high class stuff, not granite countertops and stainless steel appliances, more baseline, safe, livable communities that are more broad spectrum and open to a lot of people of different incomes that can live there. And that, because I find markets like that in my 15 years of experience, I find markets like that to be more recession proof.
Now, you've mentioned a couple of things of what you guys are focusing on and where you're focusing and what you're purchasing and why. A deal comes across your desk. What is there a framework that you draw from or a checklist when you evaluate that to see if that's something worth looking into and exploring and looking into a little bit further?
Yeah, so we have a checklist that we use for evaluating a new real estate market that we might invest in. And it's a lot of the things I just talked about. And then if a new deal comes up, we do something called a phase 1 analysis, where we look at the local crime around the property. We look at the micro median income around the building. So I'll look at the median income by block around the property. And I make sure that it matches or it's in line with the median income or higher than the median income of the town that it's in. I make sure that people that live around the property could afford to live in the property, meaning like if I qualify them based on 3 times the rent as a rental standard, I make sure that they have that coming in. So I also look at proximity to other assets too. That's all part of our phase 1 checklist. And if the property passes the muster for a phase 1 checklist, we'll move forward to a phase 2 where we formally underwrite the deal and run the numbers and determine the value add that we're going to do and find out how we're going to bring it to market rate numbers.
When you're building teams on the ground in those markets, what are some of the things that you look at that work really, really well, entering those markets, building up relationships and building formidable teams to take care on the management end of things? Yeah.
Well, you got to understand the market to begin with, right? So like, I'll give you an example. We're in Lexington, Kentucky as one of our markets. If you don't already invest in Lexington, you might not know that in Lexington, it's very common for the landlord to pay all utilities on a property. All utilities included is very common in that market. It's not common in most other markets, but it's extremely common in Kentucky for a variety of reasons. So if you don't have local boots on the ground, local people that understand that marketplace, you will miss that opportunity to offer up property with all utilities included. And that helps you compete better, and you can actually get a nice premium and better profitability offering that up if you know how to structure it. And so boots on the ground are imperative in markets, and we build that up by I leverage a lot of BiggerPockets communities through building local boots on the ground for us. And also we make sure that our property manager has an extremely strong presence in the market that we're looking at.
Yeah, you mentioned BiggerPockets. Let's talk a little bit about drivers too, because I can point to a couple of things that have really helped my business and drive my business. And I'm sure you can as well, BiggerPockets being one of those, building relationships and introductions and so forth. What are some of the other things that you can look at from, if you take a kind of like the 30,000 foot view over your business? What have been some of the drivers that have really propelled it?
BiggerPockets has been phenomenal for building our business. I think that also transparency has been great. We've taken very good care of our investors, so we get a lot of referrals. That's helped us build our business. We have a strong background in landlording. Like I said, I've been landlording for a very, very long time, so I know certain fundamentals that it takes to invest in long-term property. I don't take too many risks on deals that have big shiny dollar signs attached to them. I'll back away from deals like that, or I'll approach them cautiously. As I was talking to you offline about how we backed out of other deals that sounded good on paper, but just were too much risk associated with them. So we've built a brand for ourselves that way, about being a company that's pragmatic and just we also have longevity because we've been around since pre-recession, which not many other real estate companies can say that. So we've been around since before the recession in this business. So I think that also helps us out with our brand as well.
And that ties into my next question. You mentioned recession, and I'd like to get your thoughts on the current market cycle, where you think we currently are. And then, a lot of folks talk about a looming recession. What are some of the biggest lessons that you learned from the previous one through that, some of the things that you've seen? And then maybe if you want to share also some of the things that you're doing to positioning yourself and your company to not only survive but thrive in a next recession.
Sure. So, what do I think that we're going to look at another recession? I think that to just use language simply like, "Oh, we're due," that we're due to have one. It's kind of like you and I sitting by the roulette table and saying, "Hey, MC, this table hasn't hit, the double zero in a really long time, so we should bet on it," right?
Right.
It completely does not make sense to say that that's why we're going to have a recession is because we haven't had one in a long time. That said, the people that I hold a lot of respect for tend to believe that we are looking at that because a lot of things are starting to slow down, and also I think that it's in some ways. A lot of people that I know that I respect also all think we're going to have a recession, so that it might be just one of those self-fulfilling prophecies because everybody thinks that there's going to be one, right? That could be it as well. All that said, the people that know more than I do are starting to prepare for it, and that so out of respect and just because it's not something I want to get caught in, we're being overly cautious right now and just preparing ourselves for what could be that. I don't think it's going to be a doomsday recession like the last one was, like an absolute, what hitting the fan kind of thing. I think it's going to be more of, things getting cut in half in value and stuff. I think it's going to be more of like a long-term slowdown, and less aggressive growth and less, double-digit growth all the way across the board like we've seen in the last couple of years. I think it'll be just I think we're going to hit a glass ceiling for a little while, and we'll probably linger. We'll probably stay at the levels we are now, but with a lot less velocity for a while. That's what I think. In my business of real estate syndication, I think that the way that we have prepared for it is we underwrite our deals with a strong slowdown baked into the sauce, meaning we underwrite our deals with a higher cap rate when we sell. We'll say, okay, we're going to sell this property in year 5. Okay, let's put it a way higher cap rate 5 years from now, not way higher, but a marginally higher cap rate for 5 years from now versus where it's at now. I noticed that and I'm not knocking anybody specifically, but a lot of syndicators do not do that. So when they underwrite their deals, they'll show today's cap rates and today's market conditions 5 years from now, because some other folks believe that nothing's going to happen in the next 5 years and the party's going to keep on going for 5 more. We are more conservative than that. So I think that's how we're preparing. We're preparing for, I would say the worst, because preparing for the worst is probably not worth it. But we prepare for a more conservative outcome over the next couple of years when we project how our deals are going to do. And our hope is to outperform it from there.
Now, you have a impeccable track record as a landlord too, seeing that side of the business and the management side of that, which property managers, I mean, you could write books and books and books of stuff that you've probably seen, right?
Yeah.
It's some of the more interesting people in any networking event is talk to a property manager, because there's
they have the best stories.
Oh, the best stories. Yeah.
I've had, my YouTube channel, and I've just sat down for a beer with some property managers, and I've just said, tell me your craziest story.
Yeah.
Like your craziest tenant story. And you have no idea the things I've heard, man. I mean, from these property managers and stuff like that. So, and this is coming from a guy, I was a property manager for about 10 years on my own. And I just recently got out of it. And so I did it on my own as well. And I don't regret doing it. It was fun and it was necessary at the time. But to grow where we needed to grow, we had to let it go.
Yep. And that was going to, my question on that too is, what are some of the things that you learned that's a massive advantage coming from that property management side of it into then the buying and the syndicator side?
On the property management side, I mean, I learned the humanness of tenants, and I learned to never forget that these are people and everything like that. And so I guess I got to know a lot of my tenants. And so I saw the human side of management of real estate. And I think it's unfortunate that, in some ways some tenants have that mentality that they're just going to try and screw you, or they're going to try and, find a way to get one over on their landlord or whatever. But a lot of them are just good people and that. So I don't think that it is an adversarial, or it needs to be an adversarial relationship between an owner and their tenants. I firmly don't believe that. And some other owners I've talked to view it as a push-pull adversarial relationship. I think that it's a matter of providing them a fair and honest roof over their head and treating them with respect and dignity, but also demanding the same from them. My company mantra is to transform lives through real estate. So that doesn't mean that they get to live in the Taj Mahal, or they get any more than they're entitled to. But it does mean that I have to treat them with dignity and respect as a property manager. I learned that. That's the biggest thing that I learned as a property manager. On the syndication side and on the property ownership side, I've had to balance the humanness of it to the financial side of it, and also taking care of my investors and taking care of me and my family, and having to consider that side of it as well, to consider the other side of the equation. So.
Yeah, a lot more stakeholders, right, and a lot more things. But it's so important. It's as you mentioned, the central message that sometimes in business, you have to. You're doing it for a certain reason, as you mentioned, transforming human lives through real estate, and it's about providing affordable housing for folks. So, because of that service, we get to enjoy the lives that we have, right, and that we live.
Yeah. I think that it's a win-win, right? So if I can create a good quality existence for my tenants and exceed their expectations, and do the same for the people that work and live by my company. So that could be an employee or a partner, or someone who works for someone who works for my company, like a property management company's employees or whatever. If I focus on that and also focus on building my investors' wealth and hold those all as just as important as the next, then we've done what we're here to do.
You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. We will be right back after a word from our sponsors. My friend Dave Zook says you can be conventional or you can be wealthy. Pick one. Dave and his team at The Real Asset Investor have syndicated many successful real estate and ATM projects over the last decade. Now his team has an exclusive opportunity for investors in the coal space. Do you want to be part of an energy project that takes conventional coal and cleans it up by extracting liquids while releasing almost zero emissions? The sale of these liquids can produce strong double-digit cash flow and aggressive tax benefits against ordinary income, all while using America's #1 most plentiful resource in a responsible, efficient manner. Now that's non-conventional. For more information on this exclusive opportunity, you can visit therealassetinvestor.com or contact the Real Asset Investor team at info@therealassetinvestor.com.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the United States. Our simple, proven system will help you create real wealth and passive monthly cash flow. Learn how to find the best deals by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing at noradarealestate.com. That's NORADA realestate.com.
You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. Now let's return to our interview.
Now, Matt, you've got a fantastic book, Raising Private Capital, Building Your Real Estate Empire Using Other People's Money, and you do a great job sharing how to raise capital and also stressing the importance of the responsibility of taking money from folks and being a good steward of that. What are some of the biggest things that you've learned about raising capital that you can share? Maybe there's a couple of things that have helped you as well in your efforts of building out your business and scaling your business.
Sure. So absolutely. And so in my book, Raising Private Capital, I talk a lot about, building your investor network out of your own backyard. And I've talked to a lot of people that have said things like, well, I don't know anybody with money. I think that there's a lot of things behind that statement that person might actually just be saying that I don't want to go out and raise money, or I'm not comfortable asking people I know for money. That's probably what they're really, really saying, is I don't want to ask people I know for money. Mm-hmm. But I think that if you're willing to gut check yourself, and the book talks about this, about getting comfortable enough with your business that you see your business as a means to provide wealth to the people that you know and respect, in that. If you can get beyond, I don't want to ask people I know for money, then you can really unlock the treasure troves of private money all around you. And I submit that most people, unless you just literally are hanging out with completely the wrong people, that most people know people that if it's explained to them properly, and if they really if they're given a chance to get it and ask the right questions, then most people know plenty of people with money. You know enough people. We all know enough people right now that we could go out and buy a large apartment building or do a large real estate transaction if we know the conversations to have with our network. And so that's what the book really is about. Is about, you already know your private money network. You just need to look at your network differently.
Absolutely. And I think one of the things that's so important, and you do a phenomenal job at, and a lot of folks do another phenomenal job, is also educating people that where there's potentially sources of funds for them already, right? So there might be money in areas for people that they don't even really know that they have to utilize for certain real estate investment transactions. Just right off the top of my head, I'm thinking, IRAs, qualified retirement plans that could be self-directed, right? I'll
give you some stats, right? So there's $4 trillion in IRA accounts in the U.S. right now. I heard that from one IRA custodian. Another IRA custodian told me it was $9 trillion. So it's a big number of amount of money. It's about of money that's sitting in retirement accounts right now in America. Of that money, 3% of it is invested in anything outside of Wall Street. Okay. 3%, and still, first of all, that's still 120 billion, right? So that's a lot of money to begin with, but it also gives us all as real estate investors an opportunity to open up what we do to those around us so that they can build their wealth somewhere else aside from Wall Street. And I'm not going to knock Wall Street. I could, but I'm not going to. Because it's still a place that people can do well for themselves. But it's, as up until now, it's been one of the only horses that you can ride to wealth. if you want to passively invest. Real estate investing allows people to take their retirement account because of things like self-directed IRAs. To people take their retirement account and put it to work in other vehicles. Like I got a friend of mine who owns a horse in his IRA. You can buy jewelry in your IRA. You can buy jewelry. I know you can buy bars of gold and all kinds of other crazy stuff. And you can also invest in real estate with it. So it's well beyond Wall Street, but most people don't realize that. I think it's up to us as real estate investors to be educators of people around us about what they really can do with their retirement accounts if they wanted to.
Absolutely. And we've talked on the show too, obviously being on the insurance side of it, that there's so many folks that have capital available in certain insurance contracts that they're not aware of. So IRAs is another one of them. Think of all the equity trapped in homes, right? Not doing anything. So not paying you anything at that stage. So there's a lot of creative ways to educate people and share with people exactly, that, you might have a lot of funds available that you're not even aware of. So
my book talks a lot about that. My book also talks about how to find people around you that might actually be sitting on, like, your Aunt Sally may have, $300,000 sitting in a CD right now in her bank, earning her a half of a percent.
Yep.
If Aunt Sally was aware you would be willing to pay her 8%, you could have an easy customer right there.
Yep. Yeah. Just think about it this way too. The demographic shift happening in this country. What is it? 76 million baby boomers are coming into retirement, and at 70 and a half, there's required minimum distributions, meaning they have to take money out of qualified retirement accounts. And what a lot of folks are doing, because they don't know where to put their money, because, as you mentioned, a CD is paying you an extremely sexy 0.0, something. There's opportunities with that as well, because like I mentioned, it's got to come out at 70 and a half. They have to take a certain amount out of there.
So they could invest that in real estate in something that produces a monthly cash flow check. Additionally, a lot, and this is the other side of it, there is an enormous transfer of real estate wealth going on right now through baby boomers that I've met. Like the last 3 deals, I'm about to do my 4th deal. The last 3 deals I've done, soon to be my 4th, of multifamily that I've bought have been purchasing the property from baby boomers that were, in their 60s, 70s, that were, mom and pop landlords, or just landlords in general, into their latter years, and are now unwinding, getting out of the business, or gave it a go and now want to get out of it or whatever. Those have been the best sellers I've dealt with, because they don't want too much hassle, and they're used to doing it their way, but now they want to just get out. And there's a ton of baby boomer real estate owners out there that are liquidating their portfolios, cashing their chips, or just are aging out and have maybe held on for too long and are now looking to let go for a really good price just so they can get out. I think there's a phenomenal opportunity for picking up a lot of those baby boomer owned assets.
Absolutely. Now, one of the towns that you've operated in is Trenton. Maybe some of the listeners are not familiar with it. I was quite impressed with certain areas. There's definitely some revitalization going on. What are you seeing? What are you seeing in the town, and what are some of the developments there?
Well, Trenton's it's a tale of 2 cities in a lot of ways, man. You've got a lot of political infighting and it's a town that has had this town has had a hard time getting out of its own way in a lot of ways, which is unfortunate because it's got a ton of assets here. Trenton. So here's what's good about Trenton. It's very close to New York City. It's got an extremely high-speed train line that goes from it to New York City. It's got beautiful architecture. It's a small, manageable town, so it's not this gargantuan, megapolis or anything like that. It's a small, manageable city, and it's got great assets and good highways and good immovable things that go in and out of it. And it's also on the water. Trenton needs before it really breaks open and becomes the next Baltimore, Maryland, or the next Hoboken, New Jersey, or whatever. There are a few things that need to get cleaned up. It does have a reasonably high crime rate. It does have a lower, it has an uneven population of low income people. And that's okay, but just there's not enough other ends of the spectrum to balance all that out and everything like that. So for a lot of reasons, Trenton has gotten dumped on over the years. I think that there is a groundswell of redevelopment happening in Trenton. There's new apartment buildings being built. There's new employers coming in. So I think it's a good time to get into Trenton now because it hasn't gotten hot yet, and it hasn't gotten the secret's not out yet. So, and you can still get really good deals here. We're already fully exposed to the Trenton marketplace. We're not looking to buy any more here. I'll tell you that. And it's not because we don't like it. It's just because we've already got a significant portfolio here. We're looking to diversify and get in other markets on top of it. But we still believe in the city.
Gotcha. Now, one habit I've observed from wealthy and successful people is that they're always studying new subjects and learning new skill sets. What are you currently studying, and what skill sets are you currently learning?
I'm currently studying, finishing up Brandon Bouchard's High Performance Habits. What I'm working on right now, MC, is personal efficiency and about like how do I really leverage other people, and how do I really focus on like really hone into my greatness and just live in what I'm great at and not do anything else that I'm not great at. So we've been researching. I think I'm the one person I know that doesn't have a virtual assistant, so I'd like to get into hiring a VA, but I want to do it the right way, because I know a lot of people that hired them because it was hip to do it, and then they end up firing them because they didn't manage them properly. So I want to get into leveraging other people's time and building, and like, how do I sustainably build something? Like kind of like a la the E-Myth, which is a book from years ago, but kind of like, how do I take that and bring it into today's language for my company? So that's what I'm really studying right now.
Now, a core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So, Matt, if you cannot pass on any money to future generations, and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
That's great. So I've got you and I have talked offline about, you and I both are fathers of young kids, and that, so it really becomes something that I think about a lot, about what I want to convey to, not my daughter's 2, my son's 5. And so I really think a lot about what I want to convey to my son as he grows up to be a man of the world, a man in the world. And the first thing that we teach him regularly is gratitude. Every night when he goes to bed, I ask him, what are you grateful for? And what do you love about yourself? Those are his 2 questions he gets every night when he goes to bed. And sometimes you got to dig it out of him because he might have had a bad day, but at least I can get him back to gratitude before he goes to sleep. And some days it's easy, for him to spit those things out, but he knows that that's coming. That's number 1. And the next thing I want to convey to him, and I wish more folks in the world would really see things this way, is to see themselves in another. I think that we focus too hard in this world on making other people wrong, or on black and white, yes and no, or looking at people through their religious beliefs, or just looking at people through the way that they view the world themselves, what their political background is, whatever it is. I try and teach my kids a bit of seeing that we're all human, on like that we're kind of all spirits on a human journey, and then we're not perfect, and it's okay. So for him to just kind of forgive his fellow man fairly easily, and forgive himself too. So that would say, just gratitude, seeing himself in another, and then being willing to. So this next one's, I still teach my son this very, very much, and that's, we don't say the words I can't, because I think that most successful people I know are just people that tried that one last time. And it's not that they never failed, it's just that they tried again after they failed. And I've failed a bunch of times. I've had a bunch of awful things happen to me that people probably that other people may have quit when it happened to them, but we didn't. We kept going. And so I think that the concept of not quitting and dusting yourself off and trying again, no matter what happens, I don't care if you lose your legs, like dust yourself off and try again. I think that will create long-term success. The only people that I know that are failures are ones that quit. So those are my 3. Those are great, and I love those questions. So thank you for putting them out there.
No, I enjoy that. That's very powerful. And one of the things that just came to mind when you mentioned the never giving up and never quitting is, of course, Tiger Woods just won the Masters, right? And there's a clip that somebody forwarded me about asking Tiger at the press conference something to the effect about, what would he share about, not giving up or something like that. And the facial expression of Tiger said everything. It was almost like a foreign concept to him. It was almost like saying a word to him that he didn't understand. He was looking at the guy like, I don't know, what do you mean? What do you mean quitting? Like that. And he was like, it's not ever an option. You don't, it's
right. So, we just don't do that. Yeah.
He was like, I'm sorry, I'm not familiar with that concept of quitting. I don't understand what that word means, right? His facial expression was like, when I saw that, I'm like, that's priceless right there.
It really is. Yeah, that's brilliant. That's brilliant that's so ingrained into his psyche.
Yeah.
Quitting is not even a possibility for him.
Yeah. If you're ever going to see him triggered about something, he was probably triggered saying like, what do you mean quitting? Are you kidding me? No, never.
I can only hope that I can convey that level of conviction to my son, you know? And that's why I know I will have succeeded when I've created a grateful, forgiving, not quitter,
Yep. Absolutely. Well, Matt, where can my listeners learn more about you? Where can they follow you? Where can they stay in touch and informed of all the projects that you're involved with? And where can they grab a copy of your book?
Sure. They can do all of that, including getting a copy of my book at DeRosaGroup.com. That's DeRosaGroup.com, DeRosaGroup.com. Everything that you just talked about is there. My book. They can register as investors with us, or if they want to hear more about investment vehicles we do offer, because we do offer passive investments. You have to qualify about them, and you have to be, we have to vet you and interview you. We don't take on just anybody. So we have to have that conversation. You can register for that conversation on our website, and you can just learn more about us and our background through that website as well. So that's DeRosaGroup.com.
Fantastic. Well, thank you so much for coming on the show, and always a pleasure to speak with you and providing so much value for my listeners.
Well, you're quite welcome, man. Thank you for having this show, and thank you for the honor of being here with you today.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. Thank you again for joining me on the Cashflow Ninja. If you like what you hear and appreciate what we're trying to build here, please subscribe, rate, and write a review for our show on iTunes, and share our show with family, friends, and your network. If you're not a subscriber to our newsletter, you can sign up for our newsletter at cashflowninja.com. I want to thank you for spending your most precious resource with me today, your time. Until next time, my friend, live a life of passion and purpose on your terms. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.